to the 8th Annual Naturenomics Forum, and the title for this year, Ecology is Economy, has never been more relevant than it is today. We all know that one of the biggest issues facing our world, our society, the way in which we live, of course, is the damage we are doing to our climate and to our environment. My name is Charles Mindenhall, and at Blenheim Chalcot, we've been building businesses that try and tackle particularly thorny problems. We try and come up with innovative solutions to those problems. But the biggest issue we face globally, of course, is the damage we are doing to our environment and what to do about it. The thing I'd like to share with you today, to get you thinking about this, is how we account for just one day's delivery of Amazon that I got today. And here are the boxes, various boxes, as you can see, that I got from Amazon. Now, you could say I was buying too much. Perhaps I was. But the question I would pose is, who's paying for that? Well, I'm obviously paying for some of those goods, and maybe I shouldn't be buying so many goods that come in those sorts of packages and in that form. But is Amazon paying for the waste that is created through the deliveries it makes? Now, some of those packages hopefully get recycled and are used again. But it strikes me that we are not properly accounting for the waste that we create and the damage that has on the environment. Is Amazon paying for it? Are Amazon's investors paying for it? Am I as a consumer paying for it? Well, I would argue that the world is paying for it indirectly, but the people creating the waste, me, Amazon's investors, are not paying. What we need is a radically different way to account for the damage we are doing to the environment. And that's why I think this year's topic, Ecology is Economy, is incredibly important. We need to rethink how we account for the damage we are doing, and why this topic of green accounting is incredibly relevant. So I wish you all a fantastic conference. I'm sure you will have some very interesting discussions around how to tackle this topic. And one thing I hope is the Eastern Himalayan region is one of the places in the world where you can come up with very innovative solutions to how to tackle these issues. We might not be able to do that in the UK or the US. The Western world might have already laid its path. But hopefully in the Eastern Himalayan region, you can innovate, you can come up with those solutions and come up with a radically different way of protecting our environment. Good luck.
Hello, my name is Mark Gough, and I'm the CEO at the Capitals Coalition, a global collaboration that's transforming our understanding of value. I wanted to talk to you today about this concept of capitals. The idea that if we invest in an asset, in nature or people or society, that we then get a return that benefits all of us. This concept's been around for some time, but there's been many calls by many prominent people to change our approach to capitalism, to start thinking about capitalism that includes nature, people and society, and not just the economic needs that we have. The Capitals Coalition formed from the Natural Capital Coalition, which brought together those that were thinking about the environment and nature, and the Social and Human Capital Coalition that was thinking about people and society and well-being. This united community is now working across all of those areas to better understand our relationship with nature and people. Why are we doing this? Well, we're facing three significant challenges in the world at the moment: climate change, the loss of biodiversity, and also increasing inequality. And the reason why we're not able to tackle these is because we don't have the right information at hand to be able to inform day-to-day decisions. We've got lots of incentives, we've got lots of great campaigns, we've got lots of great work going on. But until we start embedding this in the day-to-day decisions, we'll never be able to actually make the significant transformation that we're looking for. How do we do this? We do this through capitals. So this concept I've started talking about, that nature, people, society can be an asset that we invest in, that we look after, that we nurture. And if we look after our people, if we look after nature, it pays back to us in services and benefits in kind that we at the moment do not take note of. It's invisible in the way that we work. How we do this through collaboration. with lots of different organisations around the world, coming from all of the different sectors, whether it's from business, from government, from financial institutions, from NGOs, civil society, accountancy bodies. All of these different players play an important role, and through the community that we help to curate, we are looking at ways to harmonise, to standardise the approaches that we take to a capital's way of thinking. And this transition over the last 5 years has been an awful lot achieved. We've developed guidance that has been internationally accepted, such as the Natural Capital Protocol. We've been recently releasing guidance on biodiversity and various other documents like that. And we've been helping the community to actually apply this in practice on the ground through case studies and through different forms of application and changing decisions day to day. But we're now entering into a period of acceleration where we need to really start moving from language of we could do this, which is voluntary, into something which is much more mandatory, an approach which should move through through to must do this. The capitals, there's 4 of them that are commonly used. You may have come across many different ones as well, but the 4 most commonly used are natural capital, so the stock of renewable and non-renewable resources that combines to yield a flow of benefits to people. There's also social capital, so that's the networks, that's the shared norms, the values, the understanding. Then there's the human capital, which is the knowledge and the skills and the competencies that people have. And then there's produced capital, the man-made goods, as well as all the financial assets, so the financial capital in there as well. And these 4 capitals together create an integrated, holistic way of thinking of the world. There's 3 things that capitals has taught us over the last 5 or so years that has been being applied very concretely in application by business, finance and government. And these 3 shifts are very different to what you might think of through corporate social responsibility or environmental social governance, the ESG work. What this does is take it all a step further than that. Instead of just thinking about the impact that we have on the world, which is often at arm's length, something that we can deal with on a Friday afternoon, we're also thinking about the dependency that makes it a Monday morning issue, something that when we get up, when we get into the office, when we get in front of our desk, we need to start thinking about now, because we're dependent upon nature. Without the flow of water, we do not have an operation that will run. Without the people in our building, we cannot do our work. So that dependency, that way of thinking like that, does change the way that we think about sustainability. Instead of being this impact, it's now also a dependency as well. We're also thinking about valuation. So the idea that we can not just measure the amount of change, which is what we often see, 1,000 tons of carbon, 1,000 cubic meters of water, 1,000 hours of training, to start thinking about the value that is provided from those metrics. So when people are being trained, for example, how does that actually lead through to actual changes in society? When we're actually thinking about carbon, what is the actual social cost of that on people? When we're thinking about water, how much water is actually needed by people in the local environment? How much water is there? Those sort of things are really important. That context comes through valuation. Now, valuation is often confused with monetization. Now, monetization is a great way of thinking about the world sometimes. It allows us to compare apples and apples and understand how it relates into capex decisions, for example, so where we invest and things like that. But valuation is much broader than that. It's the relative importance and worth of something. So if something is valuable to me, I can start having a reason to act. And this is where valuation really becomes important. It moves us from just having nice concepts into actual action. And that's really important. The third thing here is about the system. Now, in my past, I used to work within businesses, and we would often have different people coming to us and saying, well, the most important thing is climate. No, the most important thing is biodiversity loss. No, the most important thing is inequality. Well, all of them are very important. But how do we actually make an understanding about how they all connect? Well, capitals allows us to do that and allows us to see the trade-offs that we make in every decision, which we automatically do, but makes those very visible. It makes these things that actually previous to this were there but invisible to our accounting rules, were invisible to the way we set out our books, the way that we talk to people. It puts those front and center so that we have to deal with them. So the way that we're going to address this within the community, the way that it's being addressed at the moment, is through four change agents. So the first of those is changing the math, changing the way that we do the accounting rules, standardizing the approach that we take. The second of these is actually changing the conversation, the definitions, making sure that we've got a common way of talking. We've got local networks setting up. We've got people all around the world starting to address these issues from a local viewpoint about what value really means to them, what it means to local communities. And that conversation is really important. Until we can talk about nature and people in such a way that it becomes second nature to our decision making, we're never going to be able to see the transformation that we want to. The third change is around changing the rules. This is the incentive mechanisms. This is the motivation that we would have to change things. This is sometimes legislation, but this is also the bringing together of the social norms. It's the enabling environment that will allow businesses to actually act. It's the rules behind the way that financial institutions can invest their money. And finally, it's about changing the system. And if we're really going to see the transformation we need to actually change the system that we're all working in. And that means that by the end of this, not only will decisions be informed by the cost and the price of things, but they will be informed by the value, and not just of value of money, but value of nature and people as well. There's lots of different projects that we are involved with around the world at the moment. The way that we work is through the community. We're a collaborative vehicle. So we've got people all around the world applying capitals in different ways. So within the Change the Maths, we're looking at standardization of the approaches, of the protocols that are already out there. There's already work going on through the International Standards Organization, through ISO. There's other work going through Value Balancing Alliance, which is part of the coalition, looking with the European Union and the Commission to actually start standardizing those principles behind natural capital accounting. Those sort of steps to standardization are going to be really key in this next period of time. We've also got a biodiversity supplement, which recently came out, and very interestingly around the people side of things, accountability of accounting for living wage. Can we actually start moving what everyone knows is what we should be doing, paying a living wage to people, into something which is on the books? And this is a key example of what we might mean here. All the time it's down as a cost to the business on the P&L, well, it's something that we have to find more money for. If we put it in as an investment for the business, if we put it in and amortize it over 5 years and look at the returns we're going to get from people, then we can start seeing why it would make sense to invest in it. So simple accounting changes might be able to change the way that we think about that particular challenge. And that works across nature, across people and society. Within the changing the conversation, like I said, we've got national hubs that are around at the moment. We've got a database of new case studies coming through, a capital checker, which will allow you to look at the verification and robustness and maturity of different assessments. And we're launching quite soon an interactive hub to allow people to collaborate all around the world on the different projects that are going on. Around changing the rules, there's quite a lot going on there around the non-financial disclosure requirements that you may have seen within Europe. There's lots of other things going on as well around the rules that are changing, and we're just building that up at the moment. And changing the system, you may be aware of Business for Nature that we helped to form last year with many other organisations, which is really an advocacy body to take this into some of the big international discussions. There's lots of great examples out there as well at the moment, whether it's in business with organisations like Olam, the food and beverage company there, that has done some amazing stuff and is now receiving capital at a preferential rate because it's able to identify the risks and opportunities that it has in a much more clearer way than some of its competitors. And the work that they're doing is really having an impact on the decisions about where they actually have their plantations, the type of products that they use. That sort of information is coming through day in, day out now at the moment. There's also others there like Kieran, which I'm sure you're familiar with, the environmental profit and loss account. And these are just two. There's many others out there as well, and you can find out more information through the Capitals Coalition website. From finance, BNP Paribas has done quite a lot of work on this, including adding in plus and minus ratings to some of its ESG scores. Environmental social governance there, just in case I need to explain that. There's also other work, ASN Bank, ABN AMRO as well, that we've been doing work with more recently, looking at biodiversity assets and how we can make sure that we're really including those in the finance scales. At a government level, there's lots going on, including actually just this week, we've looked at the launching of the standards of the UN SEER. So this is the national level accounts going now into a political sphere where we can start looking at a standardized approach that governments would use to actually account for the natural capital stocks that they have within their country. There's lots of ways that you can take part within this process. The community is very much an open community all around the world, like I say, at a national level, at a local level, but also at a global level as well through the Capitals Coalition. There's forms of collaboration that you can use with all these different leading actors. There's lots of different tools and things that you can apply through learning, and there's different ways that you can contribute as well. I guess the key thing here is the urgency, and what I've just been talking about, the changes that we're seeing at the moment are in many ways just common sense. Of course, we should be including nature and people in our decisions, and now there is actually a standardized way that we can do this, and we've got businesses, financial institutions, governments all around the world now applying this. But unless we really start standardizing this now, so that not just the leaders, but everyone starts to do this, so that we get above 50%. So the majority of organizations are doing this, becomes a social norm, that actually if you're not actually including nature and people, your stakeholders are turning around to you and saying that you're not doing this in the right way. Until we can get to that point, this is never going to get traction. This is going to be just a sort of a piecemeal, small approach by some leading companies, and maybe they will get advantage from it. But actually what we need to do is change the entire system here if we're going to be able to address those global challenges that we see of climate change, the loss of biodiversity and inequality. And we've set out a program to do this by 2030, which means that we need to now be getting those leading organizations to apply this. And that by the end of 2025, there needs to be those standardized tools and metrics and ways of doing this if we're ever going to achieve this aim that we've set out, our common ambition, our common purpose here, and also to deliver the Sustainable Development Goals. Thank you.
So hey Kim, thank you for joining us and for being part of the 8th edition of the Eastern Himalayan Nationomics Forum. Truly glad with your virtual presence and knowing the great work you are doing. We have so much to learn from you on the importance of green investments, green accounting, and the way forward on how we adapt, rethink, and innovate about the growth models. So having said that, and given the current global scenario, there has been a lot of discussion on how to unlock nature capital for finance as a means of protecting nature. So how do we do this in a way that tangibly and scientifically benefits both nature and the local communities without becoming another case of corporatized greenwashing?
Well, it's a very good question. And I think the key in order to avoid greenwashing in the sustainable finance space, ESG investing, but especially if we focus on nature and nature-related solutions, in order, for example, to reduce deforestation or, for example, biodiversity protection, ecosystem protection. If we focus on those things, I think the key, and that is where there's still a lot of work that needs to be done, is twofold. It's a technical issue in terms of measuring, reporting, and verifying data. That is extremely important because that is just not happening enough right now. So there's a lot of talk about, for example, recently there was in 2015 there was something in terms of addressing climate-related risks. There was something called the TCFD. I know there's a lot of acronyms in the sustainable finance space, but it means the Task Force on Climate-Related Financial Disclosure, and that focused primarily on greenhouse gas emissions. However, recently there have been plans to announce also, or there was announcement of an TNFD, a Task Force on Nature-Related Financial Disclosure. So we see that there's a lot of initiatives around, for example, protection of biodiversity, natural capital, and how do we, for example, account for natural capital. But I think the hardest part is literally the measurement of we simply do not have enough data right now. In a lot of instances, we do not necessarily know what, for example, the disappearance or the extinction of certain species means for an entire ecosystem. Or, for example, what it means, how climate will relate, for example, the resilience of ecosystems and how quick can ecosystems adapt to that, and how, for example, especially how can ecosystems cope with stress, be it from what we call abiotic stress, for example, heat. How can they cope with that? And at the same time also cope with human pressures, for example, urbanization, expansion of transformation of land into, for example, for human use. And that is something that we simply do not know enough, because one of the reasons why data is lacking is it takes time. It is often, it costs money in order to, for example, hire high quality experts who do for example, the data collection in the field. And but I think the key issue is time. Simply, a lot of investors or so, a lot of corporates, governments do not want to wait several years, because companies or investors have annual revenue targets, and usually politicians have their election cycles. And until you get data to prove that what you actually promised actually also made a tangible impact, that usually takes time, because again, that is just how nature and ecosystems work. It takes time for example, negative impacts also to be materially verifiable, so you actually can see whether or not it had a long-term impact, and that is very hard. So one of the things is improved data collection. So more investing, more funding should go not only in terms of making promises, but also allotting some of the funds to actually data collection. And then you need to report those results somewhere, because currently a lot of companies or investors are not properly disclosing data. So it's very hard to even verify if you do not have any data to work with, even incomplete data. Sometimes it's just not reported, so it's very hard to make any assessment. And then also the verification part. You need experts who verify data. Even if you have data and there's no form of peer review whatsoever, then you can basically make the wildest claims of having a positive impact, for example, on ecosystems, or not having impact, for example, on flora or fauna. But yeah, if no one verifies that, yeah, you're basically, your claim remains unchallenged. And then in the end, a few years later down the line, we might find out the consequences are actually much more devastating than initially anticipated. So that is something to bear in mind. So data collection is the one point. Sorry for the long talk, but that is the one point. And then the second point is enforcement. Regulators can make all the rules in the world. If they are not enforced, then it doesn't amount to much. We can see, for example, in Brazil with the Amazon deforestation and the fires that are often in the news cycles, or in Indonesia with tropical rainforest destruction, deforestation for palm oil plantations. There's a lot of talk about that these countries have strong laws, but the strongest law or the strongest rule amounts to nothing if it's not being enforced. And that is one of the key elements where there's still so much, how do I say it, so much room for improvement, because enforcement is the other thing that is severely lacking, sometimes be it for corporate interest or for political purposes, that governments or politicians or regulators look the other way. But it is literally the second key element in order to avoid greenwashing. So if I'm a company, if I'm an investor, and at the same time I make promises that I want to protect the environment, but on the other hand, I'm lobbying governments and politicians and regulators in order to either lower rules or not enforce them, then that is greenwashing in its purest form, because it is a main contradiction in what you're saying publicly, but what you're actually doing privately.
So I think now, if we would like to highlight on the green bond market, which is actually expanding, and people are pointing to the successes of sustainable funds during the COVID-19 crisis. as
Yeah.
a proof that sustainable investments are profitable. So if
Yeah.
you could quickly highlight on how do we build on the strengths of the green bond market and what are the weaknesses that need to be eliminated, particularly in analyzing and accounting for their environmental friendliness.
Yeah, so green bonds is I'm not sure if all the participants or your listeners are aware. So a green bond is basically, it works like a traditional bond. It's what is called a fixed income security. And basically, as an investor, it's different from a stock in terms of, if I do acquire bonds, I basically, that's why we call them fixed income. I get a fixed return, and usually an annual return for a certain duration. We usually call that the maturity period. So basically, for that time, let's say you someone issues a bond, be it a government or a company, issues a bond that is has a maturity period or maturity date of 10 years. And basically, over 10 years, each year, I get a certain fixed return. And then at the end of the period, I also get my initial investment is returned to me. So basically, that is the profit that I make. It's like these payments in between that I basically can bank as revenue, as profit. So that is how a bond works. And now we have traditional bonds. Companies use them for funding R&D or for basically funding their operations or reducing their debt. That was a way of doing it. And now we have green bonds. Green bonds are basically meant in terms of, for example, project level finance to use their proceeds. So if an issuer issues a bond and then gets money from investors, he's supposed to use that for a certain type of activities, usually green activities, be it for reducing carbon emissions or for promoting reduction of waste or for proper water management. And for example, ecosystem and biodiversity protection are some of those as well. For example, reforestation, afforestation, or just looking for alternatives to business models that are very destructive or put pressure on ecosystems. So that is a use of proceeds. And there's talk about that green bonds are actually more efficient than regular bonds because they take into account what we call ESG, environmental, social, and governance factors. So the core belief is, or the core principle is that the core premise is that since climate change or since natural degradation, natural capital degradation will have an impact on business activities. So if I'm investing in a green bond, I will sort of already take these risks into account, and hence that sort of investment is better protected against volatilities caused by climate risks or by nature-related risks. However, and that is the big however, and that is something that everyone needs to be aware of, currently, in its current form, green bonds are practically unregulated. They, in no country in the world, even in countries like the EU or like areas, regions like the EU or so, there's currently, I'm saying currently, there's no proper regulation of green bonds. So basically everyone who issues a bond can call it green. And that is what we also, in the previous question, that can amount to greenwashing. So basically there's no regulation no regulator will go to someone who issued a green bond and will basically say, you are not fulfilling the conditions of what you promised. So there's nothing like that. And that is one of the major risks. The second risk is green bonds, they basically work what we call ex ante. Basically, you make a promise prior to the fact. So, and you say you will promise to use the money for certain activities. That is like saying, if your mom gives you money and you promise her that you will go to the supermarket and you will just only buy healthy stuff, like vegetables. However, your mom has no control of what you do. So if you go to the supermarket and you see some really nice sweets or whatever, there's no control over whether you spend it for something else instead of spending it for vegetables or for healthy stuff. So, and that is similar with green bonds right now. we can promise, or an issuer can promise. That can be a government, that can be a company. Some are like, yeah, for example, financial institutions issue bonds, for example, especially multilateral development banks and development finance institutions like the World Bank or the Asian Development Bank. They also issue bonds. And they are usually saying we use that money for ESG related activities to protect nature, to reduce carbon emissions, things like that. But there is no mechanism, no penalty mechanism to hold them against that. And that is a huge issue right now of green bonds, because you basically have to trust their word. You can look at what they do, and you can still sell a bond if you find a buyer in between, or you can sell your parts in a bond. However, other than that, there's no mechanism of holding someone against, like, yeah, these promises. So what we see the next stage in terms of basically countering that lack of accountability is creating what we call sustainability linked bonds. A sustainability linked bond is linked to specific performance metrics or performance targets, like key KPIs, key performance indicators. So basically, a bond will be monitored for its entirety of the maturity period. And then every year there will be, so for example, an impact report. And based on that impact report, the payments, the annual payments, what we call the coupon payments. So these annual payments, these annual interest payments that are usually fixed, they become variable, and they basically become linked. You get a basic payment, what we call a baseline payment, and then you get a variable thing according to how much positive sustainability impact has been generated. For example, how many emissions have been reduced, or how much forest has been protected, or how much trees have been successfully grown, in terms of reforestation. So, and then that gives you much more accountability because it is directly linked to a specific outcome. But that also brings us back to the first question, that then we need proper measurement, reporting, and verification structures in place. Because if you do measure very inconsistently, you get very different outcomes. It's like, I give the example, although I do not want to talk too much about him anymore, but Donald Trump famously said that if we don't test for COVID, there will be less cases. It's the same thing. If you do not measure any of the negative impact, then you can present only the positive impact. And then there might be an incentive to do less measurement, because then your coupon payments as the issuer will also be lower, because no one can prove that you did not have the positive impact that you promised. And again, just to make it clear, so a sustainability linked bond is structured in a way that if you do not have the promised impact, positive impact, then the coupon payment will go up, because basically, as an investor, I feel that if you cannot comply with what you promised, the risk for me is higher. Hence, I should get more interest pay, because the overall volatility of the product is increasing. So basically, if I do not comply with any environmental promises as an issuer, so those who issue a bond, they need to pay more. So there could be an incentive for them to try to not properly measure, so that it seems as if they have the promised impact. So that is where the regulator needs to come in and needs to set up an independent verification mechanism. So for example, using a panel of scientists, independently appointed scientists, to look at some of these results for sustainability linked bonds. That could be a solution. So similar to what happens in scientific peer review. You basically have someone independently look at results. That could be a way of addressing these accountability risks.
Yeah, thank you, Kim. That was like truly, truly good. And I mean, the truly great insights that you have brought to the table now, it definitely shows us the way forward. And as interest in sustainable finance grows in Asia, we would love to know recommendations from you. We would love to learn from you on how can Eastern Himalayan nations which includes the Northeast India and the neighboring countries, Bhutan, Bangladesh, China, Nepal, and Myanmar. How can we drive more of these investments in the region, particularly leveraging the strengths of their rich natural capital in a non-destructive and sustainable manner?
Well, I think it's very delicate in that region because, for example, one Nepal, for example, I heard Nepal is currently suffering a lot because, for example, of COVID, the drop in tourist visits, because a large part of the not a large part, but a significant part of domestic gross domestic product is generated, for example, by tourists and those, for example, who want to go to the Mount Everest. It is always, and that is the challenge, because you want to have economic development, but on the other hand, you also need to make sure that your resources are being protected and that you're not necessarily sacrificing your natural resources for short-term economic development. And that is what a lot of countries are sort of like, with quickly growing populations, and also populations that try to sort of like, expand their middle class. So, and that is a challenge, because on the one hand, for example, for Nepal, I know there's some development banks that, for example, are active in terms of building dams, hydro dams, in order to the provision of electricity, which again would help economic development. However, that is always like a two-edged sword, because on the one hand, you basically allow economic development and economic growth, which will help people out of poverty. But on the other hand, if you deplete your natural resources to a certain extent, it will, at some point, you will become entirely dependent on imports. And also, because either your agriculture is not efficient enough anymore, because soil quality has depleted to a certain level. And these are very important things that we need to consider in that region. So in terms of sustainable finance, what would be a recommendation is put these things that we discussed in the previous questions in place, put accountability structures in place, so that because again, there can only be sustainable finance with proper measurement, reporting, and verification of data and enforcement of environmental laws. So that would be the first suggestion in the Eastern Himalayas, because without that, you will not either get sustainable finance. It will just be a greenwashed sustainable finance. And that is the main risk. So without these things in place, you cannot. And always be cautious that, again, not every investor or so who promises that something will be green will necessarily be green. I'm not singling out anything specifically, but I'm saying, for example, large infrastructure projects, for example, the Green Belt and Road project, for example, is a good example that even if there's good intentions, or even let's assume for a moment that it's entirely apolitical, you need to make sure that the proper structures are in place to assure measurement, reporting, verification of impact, and enforcement of environmental laws. Otherwise, there can be no solution. And try to find the proper balance between economic development, short-term economic development, and long-term environmental protection. I think those are my key takeaways.
Thank you, Kim. This was truly insightful.
Hello, my name is Alex Robinson. I'm a director and co-founder at Nature Capital. We help landholders unlock value from their assets in the UK, and I'm going to give you a quick overview as to our approach, our methodology, and also why this is relevant, so relevant in the UK right now. So I just want to start with two fundamentals. Firstly, why use natural capital as a framework? Well, it considers all the benefits, so the ecosystem services provided by that land holding. So yes, agriculture or timber provision as the common ones, but also the secondary and tertiary benefits provided, such as carbon sequestration, water filtration, flood alleviation, and so on. It brings a wide array of information together to enable you to make all-informed decisions. It complements core businesses through revenue stacking and enhanced margins, and it's a good way to identify other diversification opportunities. Secondly is the principle of stick and carrot. And what I mean by this in the UK particularly is regulation and opportunity. So natural capital as a concept has been written into regulation in the UK. So the 25-year environment plan that we have, the draft agriculture and environment bills currently going through legislation at the moment. Principles like polluter pays, these are the stick which will have a financial impact on emitters. Equally, it provides opportunities for funding via payment for ecosystem service deals and in part through the next agri-environment schemes, such as the Environmental Land Management Scheme in the UK. So the reason these two fundamentals are so important is their effect on the environment and on business. It's an apt phrase and very true. Ecology is economy. For businesses, unlocking value from natural capital can come in many forms, but it is ultimately about diversifying a business's revenue streams, thereby mitigating risk and optimizing financial return. Simply, we value what we can financially realize, what we can get. The first stage is core farm or estate business, finding marginal gains in your arable operations, for example. The second stage is about utilizing any agri-environment schemes, if you're lucky enough to have those in a country. The third stage is about assessing and optimizing established diversification enterprises, so ecotourism or events or renewables, for example. And the fourth stage is about accessing payments for ecosystem services, which is sort of the next form of diversification coming online. And the benefits provided by unlocking value at this stage have direct financial upside, and in almost every case, they can also enhance the margin on other enterprises. And a natural capital framework enables you to prioritize and inform your decision making across these levels and for businesses as a whole. So what does this fourth tier look like? In the UK, we're basically focused on four main areas. Biodiversity net gains. So this is where the environmental impact from a development is required to be offset by 10% and potentially more. With carbon offsetting, there has emerged several accredited market mechanisms for rewarding the climate regulating properties of carbon sequestration and storage. So in the UK, we've got the Woodland Carbon Code and the Peatland Carbon Code, and we're hoping in time to have a soil carbon code. Corporate sustainability partnerships. So this is a direct relationship between a land holding and a corporate. Consider it a direct carbon offsetting deal, enhanced by the positive impact the land holding is having in other ways and with other rights in connection to activities and facilities. So it's carbon offsetting plus biodiversity, plus other events and partnerships. And landscape partnerships, primarily focused on water flow and water quality, so the sort of flood alleviation and drinking benefits. Water companies, local authorities, they all want scale and impact over a very specific area. And so this also, really links into sort of green and blue infrastructure options. So in order to help realize this, we've developed a natural capital realization model, which works in three parts. What ecosystem services the landholding is providing, and we split this across the sort of four well-known categories of supporting, provisioning, regulating, and cultural services. We look at the connectivity of the landholding within itself and within the landscape, and that's critical to the ability to deliver impact. And we look at natural capital active management. And this is the extent to which there is systematic measuring and reporting of natural capital factors across the landholding. So my final point on that is that it needs to be embedded in our methodology is a measuring and reporting approach. And what I've described as dynamic, it can change, which enables a tangible success to be demonstrated. So it's not just about processes, although they are important. A focus on outcomes is also critical. To articulate this, we've developed the natural capital grade to reflect the performance of a landholding's natural capital assets. It's not an accreditation. We have designed it to inform decision making. So we have applied the grade to a variety of landholdings across the UK, from traditional farms and estates of varying sizes to commercial arable portfolios, forestry blocks, renewable energy assets, and even nature reserves. Everybody has the same underlying goal: to inform their decision making in order to manage their land more sustainably. And just to finish, thank you to the Balapara Foundation for having me, and thank you to everyone who has tuned in. Good luck with what you're doing, and I hope more people and more businesses follow your lead in recognizing that ecology is intrinsic to all of our economies.
Hi, good morning, good evening, good afternoon to all of you. I'm Vivek Pathak. I'm the Regional Director for the IFC. I'd really like to thank the Himalayan Naturenomics Forum for inviting me and giving me this opportunity to talk to you all. We at the IFC are very focused on sustainability. We are part of the WorldBankGroup, and our focus is private sector development. And sustainability has really become core to what we do, because we have seen the impact that climate is having on the poorest of the poor, and how we can play a critical role in connecting international capital markets and directing capital for sustainability to where it's needed most. The Eastern Himalayan region, or the Himalayan region, as we all know, is home to a lot of critical habitat. And climate change is having a devastating impact on the countries which are around the Himalayas. For every degree rise in temperature, we've seen the impact that it's having, the flooding that we see across the Indian subcontinent, the entire impact it's having on the ecosystem, and some of the rare species and the biodiversity that we see around that region today. So what is it we think we can achieve here? The critical thing to demonstrate is that the entire area of sustainability and ecology actually in many areas does make a lot of good business sense. And therefore, the objective really is, how do we demonstrate that it's good business sense to do these things, and therefore be able to attract commercial capital, of which there's plenty in the world today, and is actually seeking homes where it can be deployed in a viable manner, in a sensible manner, and have a positive impact. We've seen that the poorest of the poor and the lower income countries typically tend to suffer a lot more when there is a catastrophe. Take Nepal, for example. In the 2020 Global Climate Vulnerability Index, Nepal is ranked as the 9th most vulnerable country in the world to a climate crisis. And we've seen this playbook repeat itself time in and again. What we've seen at IFC is that investing in green, social, and sustainability bonds is really picking up. And this is how we can actually focus on connecting international capital markets, or domestic capital in some cases, to where it can really have high impact and be used in a sensible and commercial manner. Green bonds are therefore critical for emerging markets. As we've seen today, that demand for green bonds is going up. Financial institutions are really focusing a lot more on green bonds, but we do have a long way to go to get there. I like to classify anything that's non-green or non-sustainable as a brown bond. Today, in all fairness, whereas green bonds are picking up and our issuances are increasing rapidly, it's still a relatively small percentage of what I call the brown bond market, or the brown financial markets. The objective is, as we can get more and more capital to focus on this part of the business, and the percentage of green starts to go up and brown starts to come down, that's when I think issuers and corporates will feel the pinch. They will realize that their access to diversified sources of capital is going to be reduced significantly if you're in the brown space. Whereas issuers that are in the sustainable space, in the green bond space, they will have access to a much larger pool of capital, which ultimately will mean that their cost of funding should start to come down. And the same holds good for equity. As we have more and more investors focusing on green and sustainability, that pool of capital goes up, and the brown pool of capital, as I like to say, starts to come down. Now, what can be done in the Eastern Himalayan region? I think clearly that this region is very diverse and it offers huge opportunity. Areas like tourism, eco-friendly tourism, areas like forestry, agriculture, the entire hydro resources and waterways. These are great examples of how I think we should strive to connect some of the green capital or the blue capital that's there in the world to these industries. If I look at ecotourism today, it's a relatively small percentage of the tourism that we see around the world. The question for all of us is, how can we make that a much larger percentage? And that can be done by attracting capital and by innovative ideas from people like yourselves, because I think that's really going to be the way of the future. I personally would love to see, we've got 1, 2, 3, 5-star hotels today, which are really giving us a sense of how luxurious a certain hotel is. I would love to see a similar ranking for green or eco-friendly hotels. That will give me and people like you an option, even if the level of luxury or simpleness is the same. I would prefer to stay in a hotel which has a much higher eco-star rating or a green star rating. And I think as we see a lot more disposable income in the hands of the millennials, this trend is only going to pick up. The other area is what I call the blue economy. And we have done a lot of very interesting work in Nepal to tap its hydro resources. Similarly, the northeast of India has tremendous hydro resources. It has waterways. We need to find ways to attract some of this commercial capital to help develop these resources and ultimately create a much bigger and more sustainable economy around these. The same holds good for forestry and agriculture. Clearly, some of the most fertile lands are in this area. So same question again. Agriculture is one of the largest emitters of greenhouse gas emissions today. How do we make it into sustainable farming and organic farming a way of life for people? I'll talk a little bit about Nepal. It's clearly a country where demands for capital are going up, but it also offers a huge amount of opportunities. And it's a country where we estimate that $46 billion of green opportunities will come up between now and around 2030. We also believe that sustainability is no more a do-good. It's no more philanthropy. And unfortunately, many years back, this is what happened. People would allocate CSR money for sustainability. Today, I think it's important that we recognize that sustainability has to be mainstreamed. We've seen this. There's an HSBC report which says that companies with good environment, social, and governance practices outperform their peers in the same index by almost 5%. And therefore, I think the good news is that sustainability and good returns are no more divergent. On the contrary, we believe that companies that are engaged in sustainability are over time going to have better returns than companies that don't. So I would like to really end by once again thanking you all for giving me this opportunity. And I do hope that together we can attract some of this global capital that's there into some of these economies and come up with a win-win for all of us. Thank you very much.
Thank you for joining us, Adele, at the 8th edition of the Eastern Himalayan Naturenomics Forum. We're very glad to have you with us, and we're very excited by the work the Sustainable Food Trust is doing in the UK. And we want to ask you a few questions about which are relevant to the Eastern Himalayas. So the first question is that, you guys are doing a lot of work in the agricultural sector, especially in measuring natural capital across farms, and land degradation in the agricultural sector, according to a lot of research that exists, is making agriculture a lot more expensive than it is profitable. So can better valuation of sustainability and natural capital help change the situation today, especially for smallholder farmers?
Absolutely. Well, first of all, just thank you for having me. I'm delighted to be here and take part in the conference. I think that's the kind of the killer question, really. I think there's a huge amount that can be done to reevaluate the whole supply chain globally for food and farmers, both for kind of large scale farmers as well as smallholders. And I think the distortions that have arisen over the last 20 or 30 years have been as a result of not measuring natural capital and social capital. Therefore, as you say, farming in a more intensive way using higher levels of inputs and those sorts of things have become the most dominant model of production in terms of being able to make a profit, and therefore the farmers that are delivering natural capital, delivering public benefit, are not being rewarded for those benefits, be it biodiversity, soil health, water quality, as well as things like thriving communities and living wages and those sorts of things. They haven't been rewarded as part of both the political and market structures for food, and therefore particularly smallholder farmers come off very badly, and they may be delivering very beneficial things, but they're not being rewarded for so doing. And so I think there's huge opportunity, first of all by measuring natural and social capital, and then by looking at ways in which that can be rewarded either through political or market lenses, is I think the biggest opportunity of the next 10 years. And I think we can totally transform the business case for sustainable food production, both for smallholder farmers and very large farmers across the world. And actually, I think the way that farmers will operate will change as a result, because hopefully the polluters will start paying as a result of future regulation coming in, and therefore those who are delivering positive benefit will thrive in terms of being the best business case. So I think it's very positive, and I'm excited about the future.
So based on your experience measuring natural capital and sustainability on farms in the UK, what would you say is the most effective rubric that people can use? Because you've had this different array of indicators that you've developed. So how do we better measure this? And what would you say is the way forward kind of in this particular context, especially for natural capital optimization on farms?
Well, I think again this presents another opportunity, because I think one of the things that has been holding back this process of measuring and valuing natural capital has been the fact that we don't have a common means of measuring impact. And there's now lots of tools and frameworks and coalitions operating around the world who are doing excellent work in measuring natural capital and social capital on farms and commodity supply chains and big food system level. But what we don't have is a globally consistent means of measuring that impact, therefore making comparisons between what farmers are doing in different parts of the world meaningfully. And so we at the Sustainable Food Trust believe that there now presents an opportunity to have an internationally agreed framework for measuring on-farm sustainability, and that should be equally applicable whether you are a 6,000 hectare farmer or a 1 hectare farmer. You should be able to measure the same things in the same way and communicate that, hopefully that benefit that you're providing in the same way. So we believe that there should be a common framework with common categories and common indicators and metrics, and within that there should be a common language that farmers can use as well. As you guys probably know, I mean, there's so many different ways you can, for example, measure soil health, which is arguably one of the most important pillars of natural capital. But until we have a common way that governments around the world can report on soil health, and companies around the world can report on how they are supporting soil health, for example, it's going to be impossible to make sure we move everyone in the same direction. So we really believe that there's a huge opportunity here to introduce this internationally harmonized framework, and we're working with the likes of COP26, which is happening next year in Scotland, as well as things like the UN Food System Summit to understand how we can bring countries around the world together to co-evolve this framework. We, the Sustainable Food Trust, don't want to be the owners of it. We just want to catalyse its existence, and we think that it should be driven strategically by farmers of all different shapes and sizes across the world, and obviously smallholder farmers, because they form such a large percentage of farmers across the world. They should be central to that development. So that's how we believe natural capital will accelerate across the world, is by having this common means of being able to measure and communicate it.
Mm-hmm. So what are the biggest benefits you see coming out of measuring natural capital? I mean, you've talked about social benefits and the natural benefits that come out of it. So how do we how do we kind of encourage this, and what are the key benefits that you see coming out of this?
Well, I think one of the mantra goes that you can't manage what you can't measure, and so I think that's a big aspect of it. It's like having a dashboard. Once you start measuring things, you can see the data. You can see if you're improving. You can see if things are going down. You can see that if you tweak, for example, your tillage or something like that, what impact that has on your soil health and water quality. But until you start measuring these things, you really don't have a clear picture as to how you can improve. And so I think the biggest benefit I see is that by measuring your natural and social capital as farms or communities, you can have that dashboard upon which to make better management decisions. And of course, you can't be rewarded for things that you can't measure either. So I think if you can prove that you are delivering this so-called public good, you could be rewarded both through supply chains, through companies saying that they want to only source from farmers who are delivering biodiversity benefit, for example, or through governments shifting their subsidy policies in a way which reward best practice. So I think the more farmers can evidence what they're doing, the more likely it is that this business model of agroecological approaches can prevail. Until we have the data that we can put in front of market leaders and policymakers, it's going to be really hard to make that case. So I think that's the biggest benefit.
Great. So you talk about the fact that you can use these benefits to kind of policymakers to reward these kind of good behaviors. So have you guys been doing any work in designing what these rewards might look like for farmers?
We have, yes. So obviously the Sustainable Food Trust is a international charity, but we are based in the UK. And given the current global issues of pandemics and the like, we've obviously been having to focus our work slightly more on the UK over the last couple of years. Of course, Brexit has happened here as well, and that has meant that there's been an opportunity to, whether we like it or not, look at how we redesign our agricultural policies after we leave the EU. And this has been a really interesting process over the last few years, because it's effectively given us a blank slate to say, well, we're a case study of a country that is changing at the moment. What could we do differently to reward the farmers here? And so we have been working with policymakers in England as well as in Wales and Scotland to understand how those agricultural policies could be redesigned to better support kind of truly sustainable production. We are suggesting that farmers should, in order to receive public money from the government, they should do an annual sustainability assessment based on the harmonised metrics and indicators that I mentioned earlier. So that's kind of one of our key policy aims, because until farmers start measuring things and until we have this data, it's going to be very hard to understand what we need to incentivize and what we need to disincentivize. So that's one of our key policy aims. The second of which is we feel there should be some sort of disincentive for farmers using nitrogen fertilizer. I think there's a huge amount of damage that is done around the world from overuse of nitrogen fertilizer, and I think in many cases farmers are probably using more than they need. So we feel there should be, whether a tax or some sort of incentive not to use nitrogen fertilizer, or use different methods, for example, planting herbal layers that fix nitrogen naturally in the soil. So we feel that there should be an incentive for farmers to not use nitrogen fertilizer, and that money should be used instead to support soil health. So obviously soil carbon sequestration is a big hot topic right now given climate change. So if governments can disincentivize practice which is causing damage and incentivize soil carbon sequestration, will go a long way towards achieving our global goals of mitigating against climate change using agriculture. And I think it's such an interesting time, given that agriculture is one of the only greenhouse gas emitting industries that has the potential to 100% turn itself around and become a climate change solution. So I think through policies like that, where you're incentivizing bad practice and using the money to, disincentivizing bad practice and using the money to incentivize best practice is the way we're going to change things. So yeah, it's interesting here in the UK, and it's certainly a model that we feel could be replicated in anywhere around the world.
I think you mentioned being replicated around the world. So I want to bring it back again to the Eastern Himalayas. So the vast majority of farmers here are smallholder farmers, and there's traditionally, especially in the hill areas, there have been collective forms of land management, or people have used shifting cultivation, which calls for the whole community to come together to kind of drive that, or they've been doing community forestry management. But at the same time, now governments are trying to incentivize people to move away from shifting cultivation, saying that it's damaging the soil, it's damaging the ecology. So we need to have something that's more sustainable. And the solution that they're pushing has been to move people towards settled plantations, but largely, especially in cash crops. So in some states, this has contributed to continuing forest loss and degradation. So how do we introduce this kind of model and framework, both the harmonized indicators you mentioned of natural capital and sustainability valuation, and how do we drive these policy changes so that the policymakers think differently about agriculture, especially in this context where I think things are a little bit, where there's less focus on the sustainability angle than there has been, especially in the West right now.
Yeah, that's really interesting. And I think there's huge benefits that communities of farmers can bring, even if they're all moving around and farming on a common piece of land rather than a piece of land that has a boundary. I think there's huge amount of benefit that can happen there, but there does need to be some coordination to make sure that everyone is sort of working towards the same aims and objectives. And it links back to a parallel thing that I'm working on here, which I'm currently working part-time for the government in Wales. And there's a lot of farmers in Wales who farm on common land. So they farm on, they have sheep and cattle which graze kind of in upland areas, and they all farm that collectively. And so there's a need to bring those communities together in some sort of agreement and coordination, so that, for example, with the sustainability assessment, rather than each farmer completing it themselves for their herd, which is roaming around, it could be a community-led project, and each of them feed into that. There does need to be some infrastructure, obviously, around that to make sure there's someone who's leading the coalition, and there's some agreements in place so that any funding that flows through can flow to the right places and make sure each individual is supported. But I think it's really doable. And I think for smallholder farmers, measuring and valuing natural capital could definitely be done as more of a community exercise rather than individuals, just to reduce the burden. And as you say, because there's different people working on the same bits of land. So yeah, I think there's huge potential. It's just got to be thought about in a slightly different way. But that doesn't mean to say it can't happen. I think there's so many parallels around the world. I mean, we're talking upland hill farming in Wales, which is obviously quite different in many ways to smallholder farmers in the Eastern Himalayas. But actually, when you look at it, I'm sure there's loads of parallels that we can draw. It's just a case of differing climates and soil types and that sort of thing. So I feel really optimistic that there's means and ways of measuring natural capital as more of a community rather than as individual smallholder farmers, but offering those smallholder farmers to be able to do it themselves too.
Right. And you think that this can be used then to really systematically plan for natural capital enhancement across agricultural lands in the region? Because there's been a lot of talk about the mosaic restoration potential of especially agroforestry. And so could this be a tool for that?
Absolutely, and this is where the importance of the harmonized framework comes in, because that kind of landscape level, mosaic level restoration can only happen if everyone working at the different levels, be it an individual smallholder farmer or a community of smallholder farmers or a regional government or a national government, looking at the whole big picture. That can only be successful if everyone is measuring the same thing in different ways. And if an individual smallholder farmer or a community of smallholder farmers are measuring the same thing in the same way at their scale, which may be in a village or a particular region or catchment, there's no reason why that data can't then be aggregated to form a regional or a national picture that governments or others can look at. But if everyone is measuring the same thing, measuring things in a different way, it's really, really hard to make decisions about who needs to do what in this particular region, as opposed to how this catchment links up with this catchment. And it's something, again, that's happening here in the UK at the moment, is how do we link up individual farms to kind of more regional, local collaboration, to regional targets, to national targets, and then of course international targets like the Paris Agreement. So if everyone around the world, including farmers and governments, could be measuring sustainability and natural capital in the same way, it allows for this data to be looked at, whichever scale you want to. But until that happens, it's going to be really difficult. So I think this is where this framework can come in.
Right. So I think this will be my last question to you. If you have any 3 key recommendations for the way forward, that'll be superb.
3 key recommendations for the way forward. I think we've got to, the first one is we've got to get farmers measuring things. I think we need to work towards international harmonization, but at the very least, we just need to get farmers measuring things. It can be simple tests like visual evaluation tests. So you just dig a hole in the ground and you look at your soil structure and you look at how porous it is. Count the earthworms in a given kind of square of land and just make records of that and do it each season or over time to see how things are changing. So I think that would be my first recommendation, is just find ways and incentivize farmers to start measuring and start recording information, because they will be much more prepared to be able to act if they've already started doing that. My second recommendation would be for governments to kind of truly start supporting regenerative and climate-friendly farming around the world. And I think governments have a role to step in where markets are failing. And I think supply chains, as we touched on at the beginning, are incentivizing the wrong kind of farming at the moment. And they're pushing a race to the bottom in terms of asking farmers to produce as much as possible using as little possible cost, but that obviously has significant costs on the environment and public health. So I think governments have a huge role to play in kind of shifting that around and making sure that farmers are the stewards of the landscape that they deserve to be. So that would be my second recommendation. And my third recommendation would be that, and this is quite a big one, that every single government around the world should come together on this and come up with a joint solution. We're all facing the same challenges, just in slightly different ways, according to where we are around the world. And everyone has a responsibility, particularly governments in the kind of Western world, I suppose, to make sure that all farmers around the world are kind of actively supported to do the right thing. And I don't think, I have not met a farmer in anywhere around the world that I've ever been who does not want to kind of be a steward of the land and does not want to be a climate change solution. They just need to be given the tools to be able to do it. So I would hope that governments over the next couple of years or so, and with America hopefully coming back into the Paris Agreement, that's a huge kind of benefit globally, I think, for farmers around the world. So that would be my third recommendation, albeit quite an ambitious one.
Thank you so much, Adele.